Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We got to start this week off on a pretty positive note. Some big jumps in those cattle and hog markets. What caused that big uptick this week?
Yeah, I think when you look at both cash hogs and cash cattle markets, we've been higher for the week. It's good to talk about higher prices for a change, up a couple dollars on hog prices, up 1 to 8 on feeder cattle prices, and calf prices have been very high. You know, I think when you look at where these markets have been this week, you have to look at the demand side of the equation to say, why are we getting some of the price strength that we are? Because we're certainly running still pretty large volumes on the supply side. So I think stronger demand is much of the issue that we've seen this week. When you look at either the choice beef cutout or the pork cutout value, both of those up relative to a week ago, suggesting wholesale prices are up as well. So consumer demand being strong, perhaps some of the news we got out of the jobs report today with lower unemployment has something to do with domestic demand for meat products being higher. As well, I think we continue to see the export side picking up some steam despite even a very strong dollar, helping clean up those markets a little bit as well.
Scott, does the financial sector, just the strength in the economy, we've seen that Dow skyrocket the last 3 weeks really and hit new record highs. Do we see maybe some strength from those markets as well carrying over to consumer confidence and making those purchases?
I think there is some truth to that. I will say one of the things that I like to see is as we get more jobs created, I think when you look at the distribution of income of consumers in this country, we're probably creating jobs that are most helpful for those on the lower end of the spectrum when it comes to income. And those are the ones that you give them another dollar and they're probably going to spend a larger proportion of that on meat. So I think much of the job creation we're seeing as the Dow's been stronger and certainly from the jobs report we got today is nothing but helpful to meet demand, especially again for those in that lower income category.
Scott, let's talk a little bit about those big supplies. Are we surprised to see livestock prices, cattle, hogs, for the most part, hanging on to fairly supportive prices?
Well, I certainly could have told a story that we'd be much lower than where we are today, given the kinds of supplies that we have brought on the marketplace in 2016. And again, I think it just points that demand has been stronger than many of us would have thought, you know, early on. I wish in some ways we had better ways to measure demand at points in time. But when you look at the amount of disappearance of beef and pork with these record supplies and the prices we've been able to clear these markets at, it is encouraging as you look ahead into 2017. And if the economy continues to grow at kind of the recent rates we've seen, perhaps that's the very positive side of the equation into 2017.
Scott, a couple of USDA reports this week. Let's start on the negative. The third straight row of forecasted farm income, a decline in farm income. Any big winners and losers out of those numbers and those sectors as we look at that report?
It's pretty tough, Megan, to find anybody that you might claim as a winner at this point out of that farm income report. You know, so we got a 2016 estimate from USDA, which I know will continue to see some revision as 2016 ends and they continue to gather data related to 2016, but about a $67 billion net farm income number for 2016, nearly 50% lower than just a couple, 3 years ago. So all sectors are really much lower than where they were. I will say it's just like we have a good cow herd, all synchronized amazingly well in that we've gone from record highs to record lows. And so I think across the board, it's been difficult to find what's the alternative. You know, if I don't plant corn, it's not like I can go plant wheat. That's not very exciting, or milo, or if I'm raising cattle, hogs aren't a very good alternative as well. So there's no great alternatives. It's one of the few times that I've seen where we just have had all of the revenue side of the equation so synced up across all these commodities that makes it pretty tough for producers to figure out where to move next. So there isn't much good news. I will say it's nice to see some lower expenses beginning to show up in the farm income report, and we need that to continue into 2017 if we don't want to continue to see further erosion in that farm income number for 2017.
Scott, as we talk about that expenses category, in addition to like farm expenses, do we also need to be looking at our household expenses for farmers to maybe find a place to trim back there as well to help those balance sheets?
I think it's you got to look at all sides of this. I sometimes will go into we could worry about marketing and trying to do better marketing, but those are tough because nobody really knows where output prices are headed. But you can affect costs, all right? And whether that's the direct cost of producing livestock or crop commodities, that's one area you can examine. Of course, we know cutting costs too hard has yield drags or other effects. I always say I never knew a profitable cow that didn't have a calf. So some of these things we do on the cost side we need to be careful about. You can hear a lot of anecdotal stories out there of operations who have expanded family living during the very profitable times that we saw a few years ago. And I think those are some that we'll have to re-examine, the rest of the costs for the household as they move forward. But we may be in for a longer period of costs are going to be the side of the equation that one can work on.
Scott, on the flip side of that negative, we did see trade balance come out this week, and that was a bright spot for the livestock sector.
Absolutely. When you look at what we got from Economic Research Service this week in terms of ag trade outlook, number one, they give us some overall ag numbers. So when you look at their forecast for 2017 that they just released here, $21.5 billion of net export balance. Now that's up from a 2016 estimate of about 16.6. So some good growth in that export value relative to import value that they're expecting for 2017, and that comes despite what's going to be a stronger dollar. So both stronger exports in 2017 projected, as well as a decline in imports are part of that report as well. So it is good to see that turnaround. I will remind us that we did have a net balance back in 2014 of $43 billion. So we still have a ways to go in terms of recovering to where we were a few years ago, but it's nice that we're headed in the right direction.
Let's talk about the import side of that. We've heard a lot of chatter about those beef import numbers. They look like a big number. How does that figure into that? And is that number as large as we think it is?
Yeah, well, so I certainly think when you look at the beef import side of the picture, number one, we've been a net importer of things like beef. So that is, we import more beef than we export, but we tend to be importing lower value beef products, and we tend to be a net exporter on a value basis. I think when you look at the numbers, I hear a lot about, well, the price decline that we've seen is all because of imports we brought into this country. And I will say there's a lot of other factors at play that are much more important than what we've seen in terms of imports. Yes, we actually had an increase in imports from Australia in 2015, but we've been down in 2016 from there as drought has created some issues for them, plus much stronger cattle prices in Australia than here in the United States. So not as much interest in shipping product to us. So I don't think you can blame imports as the cause. And I will continue to say, when you look in front of us, this idea of where's our next consumer going to be, it's outside the United States where we're going to get the growth in front of us. And for two primary reasons. Number one, I think we're going to get much stronger income growth in the rest of the world than we're going to have in our own economy here in the United States, given that we're a much more mature economy. And secondly, a lot more people outside the United States, and population growth in a number of countries around the world is going to occur at a faster rate than what we see in the United States. So I say all that going, I know there's a lot of cry for, well, let's just cut off imports. And I do understand some of that discussion. However, we need freer trade to be able to make sure we get our exports out as well. And so it's a fine balance between imports and exports. I will just say we have to understand that free trade is not exporting all we want without importing product.
So there's that relationship aspect to it as well.
Absolutely.
Scott, as we wrap up this week and look to next week, any reports that we need to keep our eye out for, and what are we watching?
Yeah, so I think we'll get monthly trade data next week out of USDA, which will be very interesting. Some of the weekly data that we've seen so far would suggest we're going to get a pretty positive report in terms of monthly trade data out of USDA, which is a nice surprise when you realize that the dollar's been strengthening a little bit here of late, and so hopefully we'll continue to have some good demand news and can talk more about exports when we do next Friday's program. As well, we're going to get WASDE next week as well. Going to come out next Friday, and will give us another look at what USDA is looking at as they finish up 2016 and move into 2017. So we'll see whether after making some large adjustments to cattle prices and moving them lower in terms of their estimate for 2017, it will be interesting to see whether there's further revisions in this month's report.
And to think that we're just, less than 4 weeks away from a new year. It's all winding down.
Comes all too quickly anymore. That's right.
I was just going to say, it's all winding down very rapidly. Scott, anything else?
I think that's it for this week, Megan.
All right, we will talk to you next Friday. As always, if you have questions for Scott or myself, visit our website, brownfieldagnews.com, and you can submit them there. You can also subscribe to our weekly livestock market update and have it delivered to your inbox every Saturday morning. I'm Megan Grebner on Brownfield.